This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Oil prices jumping in the early Monday trade as Iran fires several rounds of missiles towards Israel. President Trump urging both sides not to escalate further. Asian stocks set to extend a tech-driven sell-off on worries about AI valuations and a flood of new shares. A solid U.S. jobs report also adding to bets the Fed's next move will be a hike. Plus, dining and dealing in Seoul. Nvidia's Jen-Hsun Huang flags more business with SK Hynix ahead of Monday meetings with Samsung.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. And Shery said it, this is the confluence of all of these bearish factors coming into play now for markets that have been trading so high on the AI and tech-driven exuberance. We'll see if these, chickens really come home to roost today, because we are seeing, take a look at the big reaction when it comes to oil prices, just reacting to Iran's attack on Israel, really endangering this fragile ceasefire. We keep hearing kind of vague but positive sentiment coming from the White House and from President Trump, but really not a lot of detail as to how these negotiations are going. And oil now really surging after Iran fired those missiles towards Israel. Really, these talks to end the war seem to be faltering. The attacks were a warning to Israel to, quote, cease their hostile actions in Lebanon, according to one Iranian military advisor there. US President Trump, they're urging Iran to return to talks after the attack. Also criticizing Israel for its strikes on Beirut on Sunday. Remember, it was a very tense conversation that President Trump had with Benjamin Netanyahu over the past few days as well. On top of that, of course, we're watching for this tech-driven sell-off. This after that blowout jumps number from the US on Friday, all but really assuring that we're going to see more tightening action from the Fed. This really changes the landscape, particularly as we're also contending with a number of key IPOs and deals in the pipeline for tech as well. This is a futures look as we look at NASDAQ, up by about 0.3%. We're seeing Kospi futures down by 8%. Already so much selling that are causing the Korean market to buckle over the last few days. Foreigners offloading $10 billion in just a week. So those signs of strain, with the Kospi finishing 5.5% lower on Friday, set to continue. Shery.
Yeah, let's get straight to the outlook for Monday's trading. The Asia joining us now is senior editor for markets and Bloomberg opinion columnist John Authors, as well as our markets reporter Anthony Stevens. Anthony, whether it's Iran or tech, the leading to Asia right now looking pretty brutal.
Yeah, look, today is one of those days where you earn the right to call yourself a trader, right? There's going to be a huge readjustment in allocation this morning across the board, across assets. So let's start with equities. Equities in Asia started to crumble on Friday, and the US saw the greatest rotation between tech stocks and low volatility stocks in history. So low volatility stocks are stuff like Berkshire Hathaway and the things that it used to own. So tech was down around 10% in the semis. That is a very weak lead into Asia. Korean futures indicating that already. Now let's remember, in Korea, retail is already very long. Just in one ETF, the Hong Kong listed leveraged Hynix ETF, they have $11 billion of AUM, which is looking at a 20% down markdown today. So retail strength of hand is going to get really tested in Asia today. On the FX side of things, we had a huge weakening day of EM FX. As you guys mentioned, a rate hike was priced now as a certainty in December, and that really impacts Asian FX as our policymakers in the region race to kind of catch up. Asian FX was down around 1.5% if you look at the Korean won. Aussie dollar and Kiwi dollar were also down around that much. So on the FX trading side, this is one of the biggest one-off move days that people will have to price coming in on Monday, and that impacts equity returns as well. Lastly, on the bond market, we've started to see the Korean bonds lead the entire region weaker, and that will start to become much more of a policy concern in the back end of this week. Lastly, we have the US CPI on Wednesday. That becomes the most pivotal number in markets at the moment.
John, you've written at length about really questioning the AI rally. You've written about the strategic debacle when it comes to the Middle East situation. Is it really just a confluence of factors, or is geopolitics becoming relevant again for investors?
I think it's always dangerous to discount geopolitics altogether. If you actually had another further escalation from where we are here, and that really affected inflation expectations, that would be a major problem. I think where we are at the moment, however, is more about just two specific factors for why this is happening now, because markets have looked badly overpriced for a long time. One is the final real shift in expectations towards an outright hike this year that in the US that came with the unemployment numbers. I personally think that may be overstated. You don't hike rates because unemployment is too strong. You hike rates if inflation is showing signs of getting seriously out of control. Donald Trump today set out his stall that you don't, whatever you do, don't hike rates. There's no need to hike rates. That becomes the issue, and that's much more biddable. Unless we get a really bad inflation print on Wednesday, I think it's highly questionable whether we would actually need a hike imminently. So that is the one big element, and then the other is the forthcoming IPOs, starting with SpaceX. It's very hard to ignore any release of equity on that kind of scale into the market, and the shenanigans over how passive funds should be handling this, how indexes should be handling this, have been followed with minute care, demonstrates how much this is perceived to matter. So if the SpaceX IPO were to go wrong somehow or other, or if you get perverse effects in the days after, as some passive funds, but not those that track the S&P 500, have to buy SpaceX at whatever the prevailing price is, that is another danger point, which we would need to get past. As it stands, we've been very, very overpriced for a long time. While this was a very dramatic day on Friday, and what appears to be unfolding in Korea plainly looks very dramatic again, there is plenty of room to fall before this is the start of any kind of a major bear market. It's just a correction for now, if even that.
John, when it comes to the U.S. market, though, whether it's a Fed narrative or what's happening with the tech sell-off, are we again going to see a few months of this U.S. exceptionalism narrative that we've been following, and that faded a little bit with the Iran war? But again, we're seeing all of these global repercussions coming from everything that's happening in America right now.
Well, certainly one of the things people didn't put that label to it, but one of the things that comes out of the unemployment numbers being that strong, we've had 3 months, wartime months of non-farm payroll data now, and they've all been very strong. So the evidence that the US is less affected by what is going on in the Iran than the rest of the developed world and much of the emerging world does seem to be quite clear, and that brings something of the US exceptionalism trade back. A lot depends again on, we had been working on the assumption that thanks to Donald Trump, Kevin Walsh and so on, that there would be a lot more liquidity this year in terms of outright cuts, even if they weren't totally necessary. That, I think, has legitimately been revised. We still have to find out what happens to inflation, however. We need quite a bad inflation print before you get the kind of pressure from FOMC members to actively hike that Kevin Walsh can't resist.
Anthony, what does the Bitcoin sell-off tell us?
Look, I think it was another leg to the retail unwinding, right? So you saw the break through 60,000, hit stops, and now about $1 billion of liquidation. And Bitcoin's actually traded quite okay after that stop was triggered. As the Iran war kind of continues and this concept of Iran charging tolls in Bitcoin gets more credibility, you start to see Bitcoin recovering a bit. So one thing I do want to flag is that, given the size of the tech moves recently and the AUM following even the smallest, most random tech ETFs, Bitcoin is becoming a little bit more of a sideshow. Asian retail will be under pressure today across the FX and equity space, and I think what happens in Bitcoin is a very kind of sideshow to what's happening in main portfolios, given the change in risk appetite overnight.
Yeah, Anthony, and before we let you go, I mean, what should we be on the watch for in today's session, given what we've seen, the massive moves in the future space right now?
Right. So Asia, is known for its kind of proactive policymakers, right? And they will be on deck already. So Indonesia and Korea were busy over the weekend talking about the FX and how they're going to kind of defend it. You're going to see similar commentary as the day progresses, given the size of the moves in FX. On the equity side, it will depend on the size of the drawdown. Now, Asian retail in Korea is very, very exposed to the drawdown. In other markets, not so much. China is a notable exception, where Chinese markets have actually traded quite resilient overnight. And that's because, it's insulated from the U.S. bullishness. One thing I do want to touch on, what, John mentioned towards the back end, is the liquidity angle. The retail portion of SpaceX is already oversubscribed. And the retail portion of SpaceX is unusually large. It's 30% of the deal. So how that deal trades now is going to become the most pivotal aspect of retail traders' kind of gunpowder going forward to the back end of the year.
A senior editor for markets, a Bloomberg opinion columnist, John Authors there. My markets reporter Anthony Stevens in Hong Kong with us as we continue to look ahead, brace even for the start of trading here in Asia. Still to come, oil jumping, Iran firing missiles towards Israel, President Trump pushing to save a faltering ceasefire. We get more on the Middle East situation next. This is Bloomberg.
Oil prices are climbing after Iran launched several rounds of missiles toward Israel. That's even as President Trump tries to salvage a ceasefire in the standoff with Tehran. Let's bring in Bloomberg senior editor Wendy Benjaminson for more. Wendy, how long will this very fragile ceasefire last?
It's really anyone's guess, Shery. Today was a real example of just how fragile this ceasefire is, especially because as much as President Trump wants Israel to be walking in lockstep with him, as much as he portrays to the American public that Israel is in lockstep. In fact, today he said, I'm calling the shots, not Netanyahu. I'm the only one calling the shots. Netanyahu is proceeding on his own. He's using the opportunity to strike at Hezbollah targets who are supported by Iran. And today Iran had enough of it and fired missiles at Israel. All were intercepted. No one in Israel was hurt. But there's going to be an Israeli response, as there always seems to be. And Trump is, from our reporting, visibly angry about this.
He was visibly angry in the phone call with Benjamin Netanyahu just a few days ago, right? How frayed is this relationship, and how much does the issue continue to be really something that they can't get past in order to get this ceasefire to be done? This is domestic pressures continue to mount.
Exactly, Heidi. There's so many factors at play here. You have Iran, who is stating what it was willing to accept. And you have Trump, who says these are the only points I'm willing to accept, which are contrary to those. And then you have Israel off to the side, just continuing to attack Hezbollah, which is irritating Iran. And it's, there are so many factors. Just as Trump said in an NBC interview this morning, that he wanted to use Iranian assets maybe to pay off the Gulf allies, Dubai and Oman, for the trouble they've been enduring during this war. And Iran immediately said, absolutely not. These are not your spoils. This is our money. That's not going to happen. So there's a new point in the negotiations that we know they are at odds on. This is just incredibly tenuous and seems to be able to change at any moment. And yet Trump remains under incredible domestic pressure to get this over and done with.
Yeah, that would be a huge development when it comes to even future conflicts and what precedent that would set, right? But when it comes to really the sticking points, including frozen assets, any progress that we've seen so far in negotiations?
None. we have seen only these things getting further apart. Trump wants Iran to say that they will never develop a nuclear weapon. They're saying, let's get to a peace deal and we'll talk about it. Trump wants the Strait of Hormuz back open and free, with no tolls. And Iran said today they're getting $1.5 million to $2 million per ship to let them transit safely through the Strait of Hormuz. That's absolutely contrary to what the U.S. wants in this. And you have people like Defense Secretary Pete Hegseth over on the side, sort of eager to start bombing again and saying things like, if they don't come to the table, we'll do whatever we have to do. So, there's just 86 ways this can go wrong at any moment, and we've seen almost no progress.
Bloomberg senior editor Wendy Benjaminson there in Washington. Let's get more on the markets now. The SpaceX IPO is set to dominate the week ahead of its trading debut expected on Friday. What a week to be making that debut with all of this market fluctuation. We also have the US May inflation print on Wednesday, a key event to watch. Markets now betting that the Fed's next move will be a hike. We'll also be getting China's inflation numbers that day. India CPI due on Friday as well. Let's bring in Deepali Bhargava, who's a head of research and chief economist for APAC at ING. Really great to have you with us. And one of the key questions is really whether we're finally going to see that pass through when it comes to inflation. The fact that we now have this ceasefire that's deeply endangered by the revival of tensions in the Middle East. Has the, sanguineness when it comes to inflationary expectations on account of the oil surge been perhaps surprising to you?
Yeah, I think it's really interesting how this week will shed further light on where this growth versus inflation debate is going. But I think so far the evidence has been really clear. One, growth has really held up stronger than expected across Asia. Part of it has to do with the tech export story. But I think the other important part is, despite the fact that, some of the larger economies like South Korea, Japan, India have actually had fuel price caps on domestic fuel prices, inflationary expectations and inflationary pressures have picked up. Something you've seen in Japan already, Korea as well, where you have had fiscal subsidies to really control the price pressures, but despite that, inflation has picked up. So I think if you look at things in balance so far, inflation and expectations of inflation going up have actually been higher than the impact on growth so far.
Do you expect that the amount of AI investment is going to just compound that inflation picture going ahead?
Yeah, I think if you look at any of the import prices, export prices for China, what you see is the more the country is tech-driven, the higher in general the export prices and import prices have been. So that's really been compounded by what's happening on the tech side, because prices, not just on the export side, but also on the import side, have been really strong, and that's really been driving the trade momentum. So I think this momentum on tech continues, which I think pulls both sides of the equation. So it not just supports growth, which I think looks super strong in the first quarter for Asia compared to expectations. But again, it impacts inflation as well. And I do think it continues for a while. I think one thing we're perhaps forgetting is when these Supreme Court tariffs were repealed, of course, there was a bit of stock building that happened, and there were a lot of push to exports that happened, and that's likely to be reflected very soon in the numbers. And that might give a bit of a respite on this huge push to AI from the export side and the prices side that you're seeing. But I think overall as a trend, AI continues to remain super strong.
I want to get to AI, but on that thread on inflation, I mean, we are getting the price figures out of China this week. When it comes to really what we've seen with the deflationary pressures in the economy, how does the Iran war and the inflationary pressures that could come from potentially underestimating the true size of the supply shock right now work into China's economy that has been more resilient so far?
Absolutely. I think China is one of the only economies, perhaps in the region, that has really tackled this crisis really well. And it's not so much about the stocks, but I think it's more about how they're able to substitute energy away from oil to, for example, coal. And that energy substitution stock building has really helped China being relatively insulated from the oil price shock. So that's point number one. Point number two is at some point when the stocks dwindle, if assuming the crisis doesn't get resolved till about another quarter, then there will be a rebuild of inventory that will happen, and that will bring back inflationary pressures. But I think don't forget, like, you know, we're still about like a 1% something on inflation. So the risk from a central bank's perspective, or the risks from an escalation in inflationary perspectives, is relatively lower. I think what's really interesting is from an economy perspective, I think there is this bifurcation we're seeing in China as well, similar to US, I would say, where the domestic side is super weak, but the external side has been relatively strong. So if these inflationary pressures pick up and we get a bit out of the deflationary zone and into a proper inflation reading for a sustainable period of time, I think it really helps profit growth expectations, which have been really muted because of a deflation. So there is a silver lining to coming out of deflation, I think.
Yeah, for the Chinese economy, but when you have a tech boom happening at the same time, economies like Korea, Taiwan, what are the chances that they get overheated, especially when you have, of course, pressure on other parts of the economy as well, imbalances that lead to their currencies being under fire?
I think what you've seen so far is super strong first quarter, and I think we should not get too tempted to believe that that gets continued in the second quarter as well. I think some of the initial readings that we're seeing from China, for example, so the April data, the April activity data does indicate that growth is slowing into the second quarter, and I think similar signs are going to come out slowly from other economies like Korea and Taiwan, as well as the domestic growth and the domestic part of the economy actually starts to get impacted from high oil pressures. We're already hearing, for example, on the semiconductor and on the petrochemical side, that disruptions in the industry have begun to hurt, because the stocks have been super high, but it's already been a while since the war is going on, and at some point these shortages and these dwindling of stocks will impact the domestic economy. So I think when you compare the growth expectations from the first quarter to the second quarter, do expect a slowdown. So we are less worried about the overheating parts of the economy, but I think more worried from the inflation aspect of it when you were to balance both of these aspects out.
Deepali Bhargava, really great to get your insights. Chief APAC economist at ING. We have more ahead on the Asia trade. This is Bloomberg. It's going to be a big day for the Korean stock market. Do look out for these stocks that, of course, in the future space, losing more than 10%. Of course, we have seen the big tech sell-off in the U.S., the worst in over a year. So with a Fed rate hike expectations, now AI valuations also getting reassessed. We know the Samsung, SK Hynix take up more than half of the weight in the Kospi. So this could really lead to big moves today. Do watch out for Nvidia. Jen-Hsun Huang, though, still in South Korea, meeting with Samsung officials, so that could provide a few fresh news cycle for the market. More ahead on the Asia trade. This is Bloomberg.
Well, we are bracing for quite the market open at the start of this trading week here in Asia, despite it being a public holiday here in Australia, as we might see some pent-up selling for the ASX when it comes back online tomorrow. But Shery, at the moment, this is the picture as we see really the coming together of a number of bullish factors. One, of course, was that blowout jobs number from the US, all but certain now that we'll see a hike from the Fed. That really changes the picture when it comes to liquidity and funding for these markets that have gone all in on AI and tech. Not to mention we have the SpaceX SpaceX IPO to look ahead to this week, as well as just that pipeline of other funding requirements, right? Anthropic, OpenAI, the Google fundraise as well, all in play here. This is a picture, of course, as we add to that broader theme, the increased geopolitical uncertainties, that ceasefire in the Middle East hanging by a thread as we see increased tensions between Israel and Iran. Brent crude at the moment, we're seeing 2.4% is where we trade when it comes to the last trade. We're expecting to see more of that move today, and whether or not that starts to see the pass-through into inflation is going to be the big picture. We've got a couple of inflation reads this week, including the likes of India. EMs are going to be hit hard in this session as we go ahead. The Nikkei 225 down by 4.2%. If you think that's bad, maybe avert your eyes when we get to Korea. Kospi futures are down 8%. We're watching to see whether that circuit breaker might come into play, but that's really adding, as you know, to that 5.5% decrease that we saw in the Friday session already.
Yeah, I mean, we could see a 20-minute pause in trading in the Kospi if we, in fact, do get that 8% sell-off in the South Korean market. But you've said it. I mean, the run-up to this point has been incredible, right? South Korea, one of the best major markets in the world. And we have seen now $2 trillion companies already in that market. Samsung, SK Hynix, those are the names that we're watching. Because as you can see right there on that chart, we have seen a huge lead-up, perhaps to the Computex tech event that we saw last week in Taiwan. And after that, a little bit off those highs. And you can see, of course, the Philadelphia Semiconductor Index, for example, in the U.S., a run-up of more than 80% up until last week when it lost about 10%. So what we'll be watching in the Korean markets, of course, these big South Korean tech names like Samsung, SK Hynix that account for roughly half of the Kospi turnover, more than half of the index weight. We are going to also get the latest lines from Nvidia's Jen-Hsun Huang's visit to South Korea as well. According to local media, we could see perhaps some more details when it comes to his meeting with SK Hynix, having just announced that multi-year partnership to advance next-generation memory. It comes after Huang said that the company's new Vera central processing units will use SK Hynix chips, with the two companies preparing to do more business in the coming year. Huang made the comments outside a restaurant in Hongdae. Of course, we've all been there for any parties that you might want to do in Seoul. He had dinner on Sunday with those tech executives.
And also prepare them for next year. So we are going to be very, very busy. So get ready for a very exciting new year.
Meet with Samsung's vice chairman and business executives from Hyundai to Naver, LG, alongside students and startup founders. Well, staying in South Korea, where the stock market optimism there is, of course, giving way to growing caution. That's amid concerns that the rally has run too hot, too fast. It's bringing our Asia equities reporter Winnie Su. You know, even Jen-Hsun Huang, the Jen-Hsun Huang effect probably can't prop up markets with much optimism today. We've already seen that buckling in this particular market. How much more downside is there to come?
Yeah, morning, Heidi. Well, we are hearing from investors that they are, preparing, or that there is this cautious optimism right now among investors, as they also now have more protection to their portfolio when it comes to the downside. And last week, I was just in Singapore talking to many of these hedge funds, for example, saying that they are actually trimming their upside calls to fund their downside puts when it comes to the Kospi, just because how far it has run. Obviously, at this point, nobody really wants to jump off that car of this big momentum. But at the same time, how do you protect these portfolio to make sure that you don't get tossed out of the high-speed train, for example? And right now, we are also, for example, when you look at the U.S.-listed ETF of iShares MSCI Korea, we can also see that there is a rise in these put options versus the decline in the call options. And it really goes to show how investors right now are turning more cautious. And that strategy will probably prove them right as we see market opens in about 30 minutes today.
Yeah, I mean, this has been one of the world's hottest, if not the hottest AI market so far, right? And we've seen an incredible amount of concentration. So what are some of the key risks that we should be watching out for?
Right. So Shery just mentioned concentration is one big risk just because these two names, SK Hynix and Samsung, dominate about 50% of Kospi. But also just at this point, how leveraged Kospi has been. We're talking about these single stock leveraged ETFs account for some 20% of the overall ETF of South Korea's Kospi index as well. So it really shows that the volatility will be quite high. And another key risk that I would like to highlight is really the weakness of won. And again, last week when we were talking to investors in Singapore, these foreign investors, what's so puzzling for them is just how strong the stock market is and how weak the won is. Yesterday, we heard about, in the past few hours, we also heard about how South Korea is going to come up with further measures to stem the weakness of the won. But won being at the weakest level since 2009 is just feeding through this negative loop that investors selling more stocks and leading to a weaker won. But then that weaker won is also stopping or making foreign investors more hesitant to invest in the stock market. And hence we are seeing this big, massive foreign outflows from the South Korea market. We're talking about $76 billion already flowing out of the South Korea market so far this year. So that would be one key risk to watch on top of just these macro risk. We're talking about the geopolitical risk surging in the Middle East as well, weighing on the oil importer, including South Korea.
I guess you could buy the dip. Sell-side analysts are still quite bullish and raising their price targets for the Kospi.
Yeah, exactly. So we will see how strong that dip buying force is today. And I think that is what lots of traders are excited to see today as well, because we're talking about still earnings growth very strong. For example, Goldman Sachs say that they expect the profit growth of Kospi to be about 320% for this year. And that is the strongest that they have seen in the past so many years as well. And that earnings growth plus the cheap valuation of Kospi are likely going to be the main drivers. We're talking about it trading at about 8.6 12-month forward earnings, and that is actually lower than the 5-year average at around 10 times, and also way cheaper for compared to the likes of Taiwanese market or even its U.S. peers.
Yeah, Asia Equities reporter Winnie Su, as we continue to watch the latest developments out of South Korea, with the Korea Exchange now saying that they will be holding this emergency meeting to review the market, and they will monitor any unfair trading, also illegal short selling. Now, here are some of the other stories from the corporate front as well. OpenAI reportedly planning a major platform overhaul ahead of its IPO as it steps up competition with rivals including Anthropic. The Financial Times says that it wants to turn ChatGPT into a comprehensive super app that would incorporate functions built by partners such as Canva and Booking.com, as well as coding tools, including a self-writing product, Codex. The International Air Transport Association says the airline industry will suffer a sharp profit drop this year. It sees net profit of around $23 billion compared with $45 billion last year. IATA Director General Willie Walsh told us the industry expects its fuel bill this year to jump almost 40%.
Because the real impact of the increase in the fuel price didn't really hit until April. So the first quarter was good, demand was good, and I think airlines were looking forward to another good year. But obviously, with the significant impact to disruption in the Gulf and the very significant impact on oil prices, we're now forecasting lower growth, principally as a result of the negative impact in the Gulf, and then much higher costs for the industry. Fuel bill will be about $100 billion higher.
Air New Zealand says it cut more flights in the coming months as it faces rising jet fuel costs and soft demand. CEO Nikhil Ravishankar spoke to us at IATA's annual meeting in Rio de Janeiro.
New Zealand is a very strong tourism destination and demand is actually quite strong. So we are putting those price increases up. Where the demand elasticity kicks in, we're consolidating flying, so that we're not burning unnecessary amounts of fuel, and then attacking costs. And that's by and large every airline's playbook. So we're no different.
Is it just New Zealand, or are you seeing pockets of weakness in Asia as well?
No, Asia has been pretty strong actually.
Okay.
And the US has been very strong too. So our long-haul markets are performing quite well. Trans-Tasman inbound has been performing quite well.
Yep.
Really for us it's a game of two halves. It's the New Zealand demand where we're seeing weakness.
Okay. If fuel goes higher,
yes.
What I'm sensing from you, therefore, is it's going to be a struggle to push further price rises through. So presumably there's a margin squeeze at some point if we do see fuel prices going up.
At the moment, at about, say, $170 a barrel or $175, and if cracks, the crack spread's about $70, we're recovering about 40%.
Okay.
So the remaining 60% is burning a hole in the balance sheet. But there's quite a steep backwardation curve as far as the fuel forecasts are concerned.
That was the Air New Zealand CEO Nikhil Ravishankar. They're speaking with Bloomberg's Guy Johnson at the IATA annual meeting in Rio de Janeiro. Take a look at the Bloomberg Video Hub, though. Subscribers can explore live streaming, news and interviews, all our Bloomberg TV shows, documentaries, our reporter analysis and much more. You can check that out at bloomberg.com/videos. Taking a look at some of the top global headlines that we're following this hour, and the US Centers for Disease Control and Prevention says Africa's Ebola outbreak could become one of the largest ever if control measures fail to accelerate. The Democratic Republic of Congo on Friday reported cases jumping by 71 in a day, with 21 deaths recorded. That's pointing to an epidemic that may be much bigger than previously feared. Chinese President Xi Jinping is headed to North Korea on Monday for his first trip there in 7 years. Analysts say he's likely wanting to reassert Beijing's influence over Kim Jong-un as the North Korean leader rapidly expands his nuclear arsenal and deepens his alliance with Russia. The two-day visit comes just weeks after Xi hosted President Trump and Russia's Vladimir Putin in Beijing. Peruvians are on the edge as exit polls offer little clarity on which candidate will win a bitterly contested presidential runoff. Two polls have the conservative candidate, Keiko Fujimori, in an effective tie with the leftist Roberto Sanchez. The two candidates have starkly different ideas on how to lead the politically turbulent nation. The winner will begin a 5-year term on July 28th. More ahead here on the Asia Trade. This is Bloomberg.
In the Japanese session, with the Nikkei pointing to downside of about 4%. We have already seen 2 sessions of losses of more than 1.3%, while the Japanese yen holds at that 160 level against the US dollar. In fact, Japan likely sold holdings of foreign securities, including treasuries, to finance the recent record currency market intervention over the past month, according to Bloomberg, that analyzed data of the Finance Ministry Reserve. We will be watching the JGB space as well. It's been a little bit supportive. We do have a 30-year JGB auction, as of course we're seeing perhaps a little bit more of expectations building about a BOJ rate hike this month on June 16th. Let's discuss all things Japan and bring in Jesper Koll, expert director at Monex Group. Jesper, great to have you with us when we're expecting big moves in the markets today, at a time when, of course, the market's now expecting this rate hike to come from the Bank of Japan. How timely would that be?
Look, I think that, the Bank of Japan must instill confidence that the normalization course is indeed coming through. I think the majority of economists now is expecting a 25 basis point rate hike to 1 percentage points there. Short-term market turbulence, we'll see how Governor Ueda is going to react to that. But basically, the need for an interest rate hike to actually, begin a more aggressive normalization process in Japan, the need is very, very high, because I do think the US Treasury Secretary Scott Bessent is correct. The Bank of Japan is behind the curve.
Yeah, to your point, I mean, we have seen real wages now growth for the past 4 consecutive months. We have seen inflation, of course, stay above the BOJ's target for years. Even if we see a hike this month, that would take us to 1%. How much higher do they need to go?
So it's very interesting. Where is the neutral rate? And obviously, it's very difficult after basically 25 years of rate suppression and zero interest rates. Nobody really knows where the neutral policy rate is. But the market consensus is looking for around 1.5%. I think that the underlying neutral rate is much higher at around 2.5% to 3%. And the reason you get there is by applying a simple Taylor rule. You've got a growth potential of around 1%. You've got an inflation target of 2%. So your neutral policy rate should be 3 percentage points. So somewhere between 2.5% and 3.5%. So the bottom line is that the Bank of Japan, for all intents and purposes, is likely to remain behind the curve for the foreseeable future.
Given what you're saying, does any foreign exchange intervention coming from authorities make sense at all? I mean, they've already potentially intervened, and we're still at 160.
No, but Shery, you make the important point. I mean, the currency is the outcome of the policy mix in Japan. And for all intents and purposes, yes, the Bank of Japan nudging up rates to normalize is not really going to change the needle in terms of the interest rate differential or indeed the capital flow, differentials that we've seen between the United States and Japan. So you're absolutely right. And I think that this currency intervention, when there is a pickup in volatility, yes, you're going to see that. The Ministry of Finance has always been concerned about excess volatility, but the level of the exchange rate, I think, is going to continue to depreciate towards maybe even 180, 185, 190.
Wow. Oh, 180, 185. That is insane to think about those levels from just a couple of years back. The idea that a weaker Japanese yen usually means good things for the equity markets here in Japan, does that still make sense? Is Japan still back in theory, at least when it comes to the stock markets?
Shery, the important point is, that it's great for listed companies because basically more than 2/3 of the earnings for Japanese listed companies is generated from the rest of the world, from overseas via exports or overseas production. Even the non-manufacturing companies, if you look at Daiichi Life, if you look at Aeon Group, you find that the majority of their profits is not made in Japan, but from the rest of the world. Bottom line, for every 10 yen that the yen depreciates, you're adding back about 8 percentage points to listed companies' corporate profits. So yes, a weak yen is great for the stock market because it improves earnings, but at the same time it's bad for the Japanese people because Mr. and Mrs. Watanabe is losing purchasing power.
In fact, we are getting the first quarter GDP final numbers out of Japan, breaking at the moment on the terminal growth of 1.8%. Quarter on quarter. This is better than economists had expected, but it's actually revised down from the previous forecast. And of course, we had seen perhaps a little bit more of weakening when it comes to capital spending. So this was pretty much expected for the January to March period, which also only captured the early days of the Iran war. When it comes to the GDP nominal growth, quarter on quarter, 0.6%. Private consumption, quote-unquote, growth 0.3%. Jesper, when it comes to these growth numbers, what you were saying about Mr. and Mrs. Watanabe and their wallets, how much pressure are we seeing in the real economy right now? And the new extra budget coming from the Takaichi government, will it help?
So it's very interesting because, in the real economy, you've seen continued declines of real incomes for the Japanese people. And as, food price inflation and energy inflation is going to bite, politically, Prime Minister Takaichi is struggling because opinion poll after opinion poll confirms that the single biggest concern that the Japanese people have is, of course, inflation. And putting this new budget together, it's about 0.5% of GDP, but effectively, all of this is a transfer from the public sector to support incomes for the household sector. And as far as I'm concerned, that's not going to stop the underlying problem. The underlying problem is the reality that Prime Minister Takaichi has been very slow so far in actually engendering supply-side initiatives. Where is her energy policy? Where are we seeing new initiatives to actually deregulate the Japanese electricity grid? They want to focus on data centers, but already the country doesn't have enough electricity. So cobbling this together to actually show us a supply-side-led growth strategy, that's where Prime Minister Takaichi is starting to struggle a little bit.
Jesper, Koll, always great to get your insights. Thank you so much. Expert Director at Monex Group, as we're also getting right now the current account surplus numbers for Japan, narrowing more than expected, right now coming in at that 3.9 trillion yen level. You can catch Japan Ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function as well. More ahead, this is Bloomberg. We're gearing up for an exciting day across markets in Asia. Of course, we have some more tensions to watch out for coming from the Iran war, with missiles being fired at Israel. But at the same time, we're coming off that huge tech sell-off, the biggest in more than a year that we saw over on Wall Street. The Philadelphia Semiconductor Index down more than 10%. And you can see right now the ripples through the Asian future space, with the Kospi futures now down 8%. So do watch out for potential circuit breakers in South Korea if we do get a fall of that magnitude. Nikkei futures also down 4% after already losing more than 1.3% in the last two sessions. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, or Haidi, more like bracing for the market opens across Asia. We've seen already those massive losses in the future space. It doesn't help that we have renewed tensions over Iran, a very fragile ceasefire, and at the same time, the huge tech sell-off over on Wall Street.
Yeah, all of the confluence of factors that are coming in for this perfect storm for the sell-off, right? And Asia's looking really to bear the brunt of it, particularly when it comes to these markets that have run up so quickly and so much as a result of really this AI-driven boom, right? We're talking about Korea. I'm a little bit fearful as to what we're going to see in the opening moments of the Kospi, but also watching out for the likes of Taiwan later on as well.
Yeah, I mean, we have seen, of course, the re-rating of Fed rate hike expectations really leading to that repricing when it comes to AI valuation. So anything related to tech right now in the Asian session will be key. You're watching the Japanese stock market now falling for a third consecutive session, and you can see that fall of the Nikkei right now of about 1% as the Japanese yen holds at that 160 level. At one point, we were saying this is sort of the zone when authorities have intervened in the past. Nothing has moved. We're just starting to realize now that perhaps authorities did sell some of their foreign holding securities, including treasuries, given the latest finance ministry data. But nothing has changed when it comes to the weakness of the Japanese yen. Of course, the JGB space very much watching what's happening with the Bank of Japan, and we are going to get that rate decision on June 16th. So do watch out for that. It's a South Korean market right now, which is key. Of course, one of the hottest AI markets in the world. Take a look at the open open because it's the likes of Samsung, SK Hynix. Guy, if you flip up the board, you can see how South Korea is opening right now. Those two stocks make up for more than half of the Kospi index. And you can see right now, we still have not traded, given, of course, the big pressure that we're seeing in this market build up. The Kospi already down more than 1.5% at the moment, as the Korean won is also a little bit stronger against the US dollar, as we have seen it now fall towards that 2009 low against the greenback. Of course, we have heard from authorities already over the weekend saying that they're ready to defend the markets. They're ready for this volatility. We have seen the Korea Exchange also holding that emergency meeting this morning. And really watch out for that circuit breaker, perhaps, Heidi, that could come if we do see a fall of about 8% on the Kospi.
Yeah, we could see a lot of pressure points today. And of course, as you mentioned, Shery, what is not helping is this ongoing escalation of the situation in the Middle East, right? The ceasefire just really hanging by its tendrils at the moment. President Trump has sounded, still optimistic that he thinks it's going to be done. But the increased escalation of hostilities between Iran and Israel is certainly not adding to that confidence. This question as to when we're starting to see oil prices continue to spike up and when that's going to pass through to inflation is going to be key, particularly as we now have really that assurance from those jobs numbers that the Fed will need to hike. We are seeing that jump when it comes to oil, though, and we'll continue to watch the reaction across treasuries. S&P futures at the moment actually not doing very much.
And we're also watching the reaction in the South Korean stock markets, especially at this moment, as Nvidia CEO Jen-Hsun Huang is now speaking to the press together with the SK chairman Che Tae-won in Seoul. Take a listen.
So that we can advance Nvidia's architecture and SK's memory technology, SK Hynix's memory technology together, so that we could achieve the highest performance, the greatest value for the market. We are also expanding our partnership to include many new markets. This last week, I announced 4 new products. Our AI supercomputer, today called Grace Blackwell, next generation Vera Rubin, will have SK Hynix inside. We also announced a brand new revolutionary new CPU called Vera, and Vera will have SK Hynix inside. We announced a redesign, a reinvention of the world's personal computers. We called RTX Spark. It's a partnership between us and Microsoft to reinvent the personal computer for the first time in 40 years. And that will have SK Hynix inside. We're also building a new generation of robotics processors. As you know, robotics has finally arrived. The age of physical AI has finally arrived. And no country is better prepared for robotics than Korea. Incredible wealth of AI researchers. Of course, the local expertise and the leadership of heavy industries and manufacturing here in Korea. The combination of these two capabilities makes Korea the ideal country to take advantage of artificial intelligence's next wave called physical AI and robotics. We built a processor called Thor, Jetson Thor, and Jetson Thor will have SK Hynix inside. In these 4 projects, we will expand our partnership from AI supercomputers to CPUs to PCs and, of course, very exciting robotics. These are the elements of our partnership. We're very, very grateful for our friendship with SK Hynix. Our partnership is world-class, and today we're announcing a major new enhancement to our partnership for the coming years. Tony?
You have a question?
Yeah, I have a question. Last Friday, the Nasdaq, the Nvidia stock price plunged, and the S&P 500 is plunging right now. What would you say to people who are worried about AI valuation?
We're in the beginning of the AI revolution. As you know, everyone will use AI. Every country will use AI. Every company will be powered by AI. And we're at the beginning of that journey. Also, AI has finally become profitable, which is the reason why building these AI factories is so important. When something is profitable, everyone wants more factories. We're seeing great demand the business is booming around the world for more AI factories. And so that's the reason why we're entering this partnership, so that we could extend our partnership, increase the scale of our partnership quite substantially. We're at the beginning of that AI infrastructure build out, and the future is quite bright.
Do you expect to just build a partnership with Samsung?
Well, today we're announcing a great partnership with SK Hynix and SK Telecom, and overall SK. And we have great partnerships.
What an incredible contrast listening to Nvidia CEO Jen-Hsun Huang talking about how much demand there is on artificial intelligence, talking up South Korea, of course, at the heart of this AI boom. And at the same time, you're looking at the terminal right now, and the Kospi has just triggered a circuit breaker because it's fallen 8%. So we are on pause when it comes to South Korean trading at the moment, as we're hearing this press conference coming from Nvidia CEO, as well as the SK chairman Che Tae-won. So we'll continue to watch the latest developments. But in the meantime, let's discuss all of this. Joining us now is Goldman Sachs Chief APAC Equity Strategist Tim Moe. Tim, what a time to have you on the show, because Goldman Sachs, in fact, just upgraded the outlook for the South Korean market. I believe the Kospi target at 12,000. Is this then the circuit breaker, the 8% fall and so forth, just a blip?
Quick answer to the question, Shery, is yes. I think in the longer run, this will prove to be a technical correction, albeit a scary one, in a longer term bull market. And I think we laid that logic out pretty clearly in a report we did last week, where the underlying fundamentals are still very, very strong. As you just heard Jen-Hsun Huang say, the AI story is just really beginning and is profitable. And I think Korea is very clearly representative of that, where we think that corporate profits this year, obviously led by the tech companies, but not only the tech companies, the semiconductor companies, we think overall corporate profits will be up 320% this year. Consensus has just continued to move their numbers up. In fact, last week they went from 275 to 287, which is where we currently stand. Next year, we think profits can also rise another roughly 35%. So the underlying E in the story here, the earnings, we think is still very robust. Now, valuations actually are still very reasonable. The overall Korean market after last Friday's correction was just around 7.5 times earnings. And of course, if we mark that to market with today's decline, we'll be trading at less than 7 times earnings for the overall market, which means that the large cap companies, the Samsung and Hynix, of course, which account for about 53% of Kospi, are trading currently around 5 times earnings. So really the issue here is one that the stocks have gone up a lot. There's a lot of profit to be taken. There's clearly some sign that speculative activity increased, particularly for retail investors in Korea, and especially moving into some leveraged ETFs. So I think what we're seeing is an unwind of some of that accumulation, amplified by the leverage that I just mentioned. That in due course will run its course. And then we think the underlying fundamentals will reassert themselves. So really the bottom line here is that as long as we think that the underlying profits can continue, then after the shakeout in the market, we think it will regain its footing and go to higher highs.
And actually, Goldman Sachs is also leaning more towards Korea than Taiwan, even when it comes to this AI trade. Why?
Actually, we've adjusted our views on Taiwan as well. We've always liked Taiwan, but felt that Korea was slightly more attractive than Taiwan, really from the perspective of more rapid earnings growth and a lower valuation. So we liked them both, but said, okay, Korea probably would outperform, which indeed has happened to a pretty consequential degree. What we did last week was to raise our view on Taiwan also to overweight. And that's a function of the fact that we think that profit growth there will still be very robust, about 45% this year and about 30% next year. And you also got exposure to the whole tech upstream hardware supply chain in Taiwan. And about 85% of Taiwan's market has direct revenue exposure to AI. So as long as you think that the AI trade still has legs to go, which we do, then we think Taiwan is another place to be overweight. So the bottom line here is we like them both.
Tim, when it comes to the biggest threats to this rally and I guess ongoing, do you see the upcoming pipeline of IPOs and fundraising as a litmus test of liquidity, of the depth of this market?
So, Heidi, it's a great question, and we've written a lot about it. Ben Snyder, a U.S. chief strategist, and team have published on that in the U.S. And the conclusion is that yes, there's a lot of paper that's going to be coming to market with all these large mega IPOs. But we also look at the amount of demand for equity, particularly from stock buybacks. And when we look at the intersection between the amount of paper that's likely to be coming, compared to the continuing demand for buybacks and other sources, we think that overall the market can absorb that. And one metric you can look at is comparing the amount of likely capital raised, which is probably about $250 billion this year, to the overall market cap. And you look at that on a time series, and as a percentage of market cap, we're still around 1% or thereabouts. So we're still on the fairly low side of compared to history. So there may be some bunching issue here in terms of concentrated amount of paper being issued, but in the grander scheme of things, we think that that's going to be well absorbed. One point I would make, though, is that when you get to the unlocks of some of these, that could actually be more. So actually, 2027 is probably when there might be more follow-on paper that be coming to the market, and that probably is an area we need to continue to watch as well.
How much of a threat do you think a Fed tightening will continue to be?
It's definitely something to watch. Clearly, the consensus has moved towards pricing in at least one Fed hike. Our U.S. economists just moved over the weekend to delaying any Fed cuts until the middle of next year. We now think that the Fed wouldn't cut until June of next year, and then another one in December. So somewhat more dovish in the market, but we also have pushed out our view. If you look at the long end of the curve, we had, after the non-farm payroll numbers on Friday, we had long yields spike up. And that clearly is something which puts some pressure on markets because, of course, the long yield is the proverbial risk-free rate. And when you've got longer duration stocks that are priced for earnings over the longer run, when interest rates go up, then of course that part of the market comes under pressure. So we do need to watch interest rates carefully. We're not yet at a level where either the speed of increase or the level that they're at is likely to be a threat to the market. But directionally, it's something we definitely need to watch.
And how closely are you watching the developments around the Iran war, not only because of its implications of what the Fed and inflation might do, but because we are now starting to see some of the winners and losers out of all this? China has been pretty resilient. It even has its own cheap boom in that country.
For sure. So the Iran news, of course, as we know, is continued to kind of move back and forth. There's some optimism, and then that gets dashed, and so we kind of are toggling back and forth. Oil, interestingly, has been surprisingly stable. I mean, even with all the different changes in the news that I just mentioned, we've basically been hovering in the high 90s and remain there, at this moment. I think the key issue to continue to focus on is the duration of the Strait of Hormuz closure, watching that net of any adjustment, say, compression in demand or other alternative measures, because the longer the Strait of Hormuz remains closed, then, of course, the more pressure there's likely to be on various downstream areas, like in petrochemical supply chain, the food supply chain, and then, of course, energy prices. And so, if the Strait of Hormuz remains closed for, much longer, then the buffer stock, which particularly North Asia has had, which has cushioned them from the immediate pass-through of higher oil prices, that starts to wear thinner, and then we start to worry more about some more consequential upside in oil prices. We're not there yet, but that's something which we need to watch as another risk.
Tim, I think Shery sort of alluded to the China question as well. Are there opportunities there in this kind of alternative path to the AI race that is compelling right now?
For sure. So we narrowed our focus on China. We basically think that this year, if you look at China, there's basically three Chinas, if you might call it that way. MSCI China is down on the year. The A shares, as proxied by the CSI 300, are up, 5 to 10%. And then you've got the AI-related or the more tech hardware-related part of the market, which can be proxied by the Star 50 or the Chinex index, and those are up, call it nearly 30%. So you really have this focused investor concentration in the more attractive, earlier stage growth themes, whether it's robotics, semiconductors, model training, biotechnology, low Earth orbit satellites, all that sort of stuff. So the larger cap software related stocks have not done well, but the hardware related ones have. And we think that's really where the action is likely to continue to be, especially because those sectors are very much favored by the 15th five-year plan. And we all know that policy support is one critical factor for share price success in the equity market.
Tim, before we let you go, thematically, is there anything else that is piquing your attention that's not in the AI tech space currently?
Actually, quite a lot. Just to enumerate a few things. We published recently on the so-called Halo trade, which is heavy assets, low obsolescence. And those are, maybe you could call it adjacent to the AI trade, but it's really sort of the power vertical, all the larger industries that are harder to displace by, say, more effective software. Those are areas that are performing well. They're less volatile, and there's less speculative length there. So that'd be one area we'd call out. The other one is the defense theme. That has come off about 20%. If you look at, say, the Korean stocks in that area, they've come off about 20% since the start of the ceasefire. But they've had increased orders. We think that the long-term story for defense spending globally is still very, very compelling. And so if you've got a correction in the share prices, but the underlying fundamentals in terms of order book earnings and longer term prospects are still very much intact, then we think that's an opportunity to re-engage. And I'm not saying there's an immediate catalyst for that, but say over the next next 6 to 12 months, then I think the risk reward there looks quite compelling. And then if I could add a third thing, we still very much like the theme of many parts of Asia from a policy perspective, focusing on improving shareholder return. That's true in Japan, it's true in Korea, it's true in China, it's true in Singapore. I was in Taiwan, Taiwan recently, and also there the policymakers are focusing on improving the stock market, improving returns for investors. So if you want sort of a lower beta but higher Sharpe ratio trade, then we think that the shareholder return theme is one that still has a lot of traction, especially during volatile times such as these.
Yeah, we're very much watching the corporate reform story in Japan and South Korea. Tim Moe, good to have you on a day like today with big moves in the markets. He's a chief APAC regional equity strategist at Goldman Sachs. But as I said, it's really that big downside that we're seeing in South Korea markets. And you can see, of course, the SK Hynix, Samsung stocks actually falling more than 10% at one point. We continue to watch potential circuit breakers in the market given these big moves. But so far, we have also been contending with comments coming from the Nvidia CEO Jen-Hsun, who is visiting South Korea. He just was speaking to the press with the SK chairman, Che Tae-hyun. They have just agreed to partner on designing future generations of memory chips for AI. It was a multi-year agreement to advance chip design and manufacturing. We'll be watching for the latest developments around that. Naver also, we saw the downside, although this internet leader in South Korea will also be building Nvidia's DSX-based AI factories at gigawatt scale to power agents and physical AI, Haidi. So plenty of news to digest.
Yeah, we'll have much more on these markets and what's driving today's moves. A special crossover episode of the China Show and the hit Bloomberg podcast, Odd Lots. Join our very own Yvonne Mann and our Chief North Asia correspondent, Stephen Engel, as they team up with Joe Weisenthal and Tracy Alloway in the next hour. More ahead on the Asia trade. This is Bloomberg.
A sea of red across early Asian trading today, especially do watch out for the South Korea market. We are in the midst of a circuit breaker right now. They're going to start trading again in a few minutes. But of course, we saw the downside of more than 8% right there, being led by the likes of SK Hynix, Samsung, a lot to do with tech, despite the fact that we do have Nvidia CEO Jen-Hsun in South Korea right now, talking up the South Korea market. The Nikkei is also down almost 4%. Of course, the Japanese yen 160 is the one to watch at the moment. We continue to build those expectations of a BOJ rate hike later on June 16th. So do watch out for the JGB space. A little bit more upside when it comes to Nasdaq 100 futures. But remember, this is after, Haidi, we saw the worst sell-off in tech in the U.S. with the Philadelphia Semiconductor Index losing more than 10% last week.
And Shery, what's really not helping the situation is the escalation of hostilities in the Middle East, right? We're seeing oil prices climbing now after Iran launched several rounds of missiles towards Israel. That's even as President Trump tries to salvage a ceasefire in the US's standoff with Tehran. Let's bring up Bloomberg Managing Editor Jill Deses for more. So it doesn't seem like President Trump's rhetoric, his displeasure directed at Israel is really making much of a difference right now when it comes to the direction that we're going at the moment. How fragile is this ceasefire?
Yeah, no, it really doesn't, honestly. I think at this point, we knew kind of going into the weekend that there was already a lot of fragility involved in this ceasefire. We've seen some of the worst flare-ups in terms of military strikes since they originally struck that U.S.-Iran truce back in April. And then ultimately what you're seeing here is this dissolution of sort of all of this military action happening between Israel, Hezbollah. You had as contingency, Iran wanted some kind of a broader truce between Israel and Lebanon. We saw something announced via the U.S. at the end of last week, but Hezbollah ultimately rejected that. So that kind of throws into question whether or not these ongoing potential talks between the U.S. and Iran can really kind of result in anything. Obviously, when you've got these military strikes, Israel did intercept these missiles from Iran, but we're still seeing a lot of very dramatic action there. Schools closed in Israel today. Whether this ultimately results in anything that can kind of be salvaged and turned into some kind of a new ceasefire or some kind of longer lasting peace in this ongoing conflict, I think remains to be seen. But this really does show you that there's a lot of questions about the sustainability of any kind of a long-term truce here.
Yeah, Hezbollah and Lebanon, of course, a key sticking point between the two sides. What else is making a compromise difficult?
The other thing, too, is the question of what to do with various frozen Iranian assets, totaling in the billions of dollars here. So that's something that Trump has said wouldn't be part of any sort of a peace deal along with sanctions. But again, when you're talking about the U.S. and Iran and all of these various sticking points, there's so much that goes into this equation. I mean, from the start of the outbreak of this war all the way back toward the beginning of the year, there were some very serious questions about whether or not Trump would be able to push Iran to the table on, other things involving, nuclear powers and assets and such. Again, at this point, it doesn't really seem entirely clear that we will get the kind of ceasefire, the kind of long-lasting truce that Trump is certainly hoping for here. I mean, he does sound quite frustrated over this situation. Again, we'll have to see how this week develops, but certainly these developments over the weekend, very troubling in terms of what that says, speaking toward any kind of peace negotiations.
Bloomberg's managing editor Jill Deses is there joining us from Hong Kong. And here are some of the other global headlines that we're following. The U.S. Centers for Disease Control and Prevention says Africa's Ebola outbreak could become one of the largest ever if control measures fail to accelerate. The Democratic Republic of Congo on Friday reported cases jumping by 71 in a day, with 21 deaths recorded. That's pointing to an epidemic that may be much bigger than previously feared. Chinese President Xi Jinping is heading to North Korea on Monday for his first trip there in 7 years. Analysts say he wants to reassert Beijing's influence over Kim Jong-un as the North Korean leader rapidly expands his nuclear arsenal and deepens his alliance with Russia. The two-day visit comes just weeks after Xi hosted President Trump and Russia's Vladimir Putin in Beijing. Peruvians are on edge as exit polls offer little clarity on which candidate will win a bitterly contested presidential runoff. Two polls have conservative Keiko Fujimori in an effective tie with leftist Roberto Sanchez. The candidates have starkly different ideas on how to lead the politically turbulent nation. The winner will begin a 5-year term on July 28. And take a look at the Kospi coming back from a circuit breaker after losing more than 8%. It's seeing its worst day since early March when it lost about 12% back then in the early days of the Iran war. Of course, we'll be watching for any developments around Samsung as well. We know that Nvidia CEO Jen-Hsun Huang is in the country. He already spoke about his partnership with SK Hynix. They are now diversifying into new markets. SK Telecom, Nvidia Korea will also be expanding cooperation to next-generation AI research. We will be watching the markets as we're seeing this broader sell-off. And the Korean won, surprisingly, though, seeing a little bit of strength against the U.S. dollar, perhaps an indication that authorities acting behind the scenes might be having some reaction in the markets right now. More ahead, this is Bloomberg. The Japanese market continues to lose ground, more than 3.5% losses for the Nikkei, as the Kospi is losing more than 8%. Of course, a lot to do with the tech sell-off that we saw in the U.S. Rethinking of AI valuation, perhaps, is the peak of AI growth done, is a key question. So we'll be watching the tech sector very closely at a time when we're seeing those renewed tensions in Iran, with Iran firing missiles towards Israel. You're seeing U.S. futures recovering a little bit, up 0.2%, Haidi, but of course the risks clear across markets today.
Yeah, let's have a look, Shery, when it comes to how we're setting up when it comes to the other key market, what we're watching for with this correction or retracement of the risks for Taiwan as well. If you take a look what's happened to the Kospi so far, we are seeing TAIEX futures down by close to 6.7% at the moment. Hong Kong tech futures are still moderately lower there, and A50 China futures not actually doing very much comparatively to the rest of the region, given that we do know when it comes to some of those AI opportunities in China, it's quite a different track that investors have been following there. But as Asian investors continue to grapple with what is looking like a very tough start to the day, let's get back to Anthony Stevens for an update when it comes to these markets. And Anthony, it's quite interesting because we've heard from a number of people, including Tim Moe, but also, you know, more broadly speaking, we do have some analysts who take a look at this as perhaps a dip buying opportunity. It'll be very interesting if we see that sort of risk appetite emerge today.
Yeah, as we discussed together at the top of the show, right, it's a risk management day. It's not necessarily anything to do with the fundamentals. It's people who have been too long who face a correction today. And Korean retail is, you know, the case in point. That market feeling the heat. Taiwan looking like it's going to be very similar. These are two markets where retail has caught the bulk of the rally. They've had a lot of conviction, but maybe they've been too big. The leveraged ETFs in Korea, probably the most visible sign of that overextension, and how those ETFs trade in the Hong Kong session, the Hynix leveraged ETF in Hong Kong especially, will be super interesting as the day progresses, because these ETFs will need to unwind to hedge and give those leveraged returns on the downside. Now, Japan is quite interesting in the sense that it does have tech, and Kaioshia of all things is not open even yet, right? So the tech is going to continue to be weaker in Japan as the session goes, but they have a lot of defensives that are trading pretty well. You know, 7-Eleven, fast retailing, these kind of things. And that balance between defensives and the tech sector will be a key determinant in how markets trade as this session goes by. That's kind of what we saw in the S&P as well, and probably one of the reasons S&P is bouncing a little bit. Now, lastly, we have Jen-Hsun Huang in Korea. He is talking about tech tie-ups and whatnot, but you can see the depth of the bearishness from the lack of reaction on anything he is saying today. Lastly, on the Korean won, though, we are seeing a little bit more resilience there. The government action is having some muted effect. The Korean won is better by around 30 basis points. So that is a sign of hope that, you know, as long as the regulators and the policymakers in Korea do the right things, the market's fundamentals are in place. But, you know, to recap, today is not a fundamental day, it's a risk management day.
Yeah, Anthony, to your point on the Korean won, anything will do at this point, given the weakness that we've seen in that currency, right? To what you said earlier when it comes to the difference between the Japanese market and the Korean market, for example, and how diversified this market where I am in Tokyo is, what does that tell you also about the risk, perhaps, of what we're seeing happen in South Korea, where more than half of the Kospi is taken by two stocks?
Right, that tech concentration is a key risk element across markets. So TSMC, Samsung, Hynix will greatly impact even the broader indexes on the MSCI, for example. They dominate the MSCI Asia Pacific ex-Japan. But you're seeing that dichotomy even in China, right? The Chinese futures are not down a lot. The CNH is very resilient. And these are the markets where, it's not one trade like Korea and Taiwan. So, they benefited on the way up and they're going to get hit on the way down. Now, a 25 basis point rate hike should not cause all this panic given the size of the fundamental cash flows. But you're seeing the positioning unwind being a key stress point in markets here.
Bloomberg Markets reporter Anthony Stevens there is with us, just taking a look at what we're expecting as we get this market underway. Joining us exclusively is Sally Wang, who's the CEO of AXA Global Private and AXA Greater China. Sally, really great to have you with us. It's interesting, Anthony, making the point that this is a day for risk management. It's not necessarily a day that changes perceptions of fundamentals, although I suppose the temptation is there when it comes to that pullback of risk appetite. How do you make of a day like today and what it means for your business of private wealth?
Thank you, Heidi, for having me. I think we are very excited to launch the AXA Global Private platform today because even in this climate, we see that the high net worth segment is growing, even during the last few years, even during COVID. So it is very timely that we launch this platform where we pull all the insurance solutions together for the high net worth and the ultra high net worth segments. This platform actually can provide all the solutions, what they need for wealth planning, legacy, lifestyle protection, including luxury homes and arts collections and all that, even for more unique risks like kidnap and ransom. Therefore, I think it is very timely to do that for them to have some diversification, because this platform actually will provide products from Hong Kong and from Bermuda. So basically, it helps them to do diversification for asset allocation and wealth planning and legacy planning as well for their families.
So tell us about the timing. Why now for this sort of product?
We have been thinking about that for a long time, and I think nowadays we have witnessed a generation wealth transfer in this juncture. And with Hong Kong is already managing $2.9 trillion in Hong Kong as an offshore wealth center, we feel that there are many families actually needs to have the legacy planning, wealth transfer protections, and for their own planning for the long term. So therefore, this platform actually, it's a very timely time that we launch it.
When you take a look at the thematics that are dominating broader public markets at the moment, and even private markets actually, the dominance of the AI trade, the pipeline of tech-related and AI-related IPOs and fundraising rounds, how much involvement do private investors want to have in this, particularly when it comes to balancing that with risk management?
No, I think for this trend, I think most of the private management, they have to invest, be part of it, because there's a lot of diversification of assets. The requirements of diversification, geopolitical risks, and also diversification of the wealth is very important for this segment. Therefore, I think it is very important for them to participate in all sort of wealth management segment that they can really accumulate their wealth and for their legacy planning.
Which are the banks that you'll be working with?
We are working with all the private banks. It is important that we give the private banks clients with this diversification, because we are very few Europeans brand that have a big brand who is in the high net worth segment. And we can really pull together all our very good solutions within the AXA platform. And with our financial strength and our diversity in the platform, I think it will create some very good options for the high net worth segments.
When it comes to Hong Kong, this is a market that just recently overtook Switzerland as the world's largest offshore wealth management hub, as we know. At the same time, there's a lot of questions as to whether that role is going to be threatened by the crackdown on cross-border stock trading by Beijing. How do you view this risk right now?
in Hong Kong, we are already managing $2.9 trillion offshore wealth today. And I think there are many ways of compliance opening accounts, compliance trading, and very compliance insurance purchasing. So therefore, I think we need to be understanding that the compliance way of trading in Hong Kong is still here. And also, this segment is growing. The wealth, many of the wealth is already offshore, and many of them is diversified in different regions. So we need to understand that in Hong Kong, we need to have this platform, and we are an international financial center where we have a very good foundation for asset management and wealth management. Together with insurance solution, it is very, very good for the ultra high net worth segments or even the high net worth segments to continue to grow in this area.
There is a lot of risk, though, particularly on the concern that in the coming months we may see more reach from Beijing in terms of tightening these rules. Is that something that your compliance teams are working towards?
We are always working with very compliance and way of insurance selling and insurance purchasing in Hong Kong. I think we need to be conscious that there's still a big protection gap in this segment. So for the wealth that is already in Hong Kong, we need to penetrate more on the insurance gap. And at the same time, we need to make sure that we are compliant in every way with the authorities.
Sally, really great to have you with us. Sally Wang, who's the CEO of AXA Global Private and AXA Greater China. More ahead on the Asia trade. This is Bloomberg.
Broad downside across Japanese markets, with the Nikkei now falling for a third consecutive session. The Japanese yen holding at that 160 level against the greenback, but it's the likes of names like SoftBank, Kioxia, AI-related names, memory chip maker SoftBank, of course, very much exposed to the artificial intelligence trade. All down, we, of course, had that massive sell-off when it came to tech in the U.S., ongoing in South Korea as well, as we contend with renewed tensions around the war in Iran. Here in Japan, though, we're watching the pace of the economy, solid growth at the start of the year, even as the turbulence in Iran prompted businesses to cut investment. First quarter real GDP expanding at an annualized pace of 1.8%. Bloomberg senior Japan economist Haruki Kimura joins me now. I mean, it was the early days of the Iran war, so we did see a little bit of a dip, but underlying growth seems strong.
Right, 1.8%. Given the Japan's potential growth rate, like average growth base, is estimated around 0.7% by the Bank of Japan and the government right now. So 1.8%, it's a high score, and it's a very solid growth. And I look at the details, and it suggests the private consumptions are picking up for 5 straight quarter, which is very significant in Japan's standard, by the way. And also, the exports are resilient and picking up, not because of the AI boom, but the stronger auto exports. So we can say that before Iran war, the Japan's economy is gaining vigor, and it's not dependent on AI boom, so which is a good news for us, I think.
Private consumption gaining, I'm very surprised given that a lot of households feel poor with the Japanese yen at 160.
Right, exactly. But at the same time, the corporates are rising rates very rapidly, and the wage growth is accelerating, looking at recent data prints. So probably higher nominal growth is becoming, making households more confident about their future income. But that said, of course, the oil-driven inflation will hit, in my estimation, from the second half of this year. So the households surely will feel the cost of living squeeze. That leads to some necessity for the Bank of Japan that they think they need to tighten a little bit.
How is going to go there? I mean, why isn't the Bank of Japan raising rates then in this environment?
Sure. I think in June, I think in the April, the previous meeting, of course, everyone remembers that the BOJ was pausing to hike, but overturned at the last minute. I think it was a sort of a government intervention. Oh no, the Iran war is uncertain, probably you should hold back, and they did hold back. But I think from the recent signal from Governor Ueda, he's sort of resolved, after all the wishy-washy, I think we're resolved to hike rates. Of course, today's a stock plunge, market jolt. If it turns out like a collapse of a AI bubble burst or something, probably the BOJ will have a second thought. But if that's just a temporary correction, I think that today's stock market is just a temporary correction. I think they are surely resolved to hike in June.
I mean, 16th. The BOJ has had second thoughts many times in the past already. Even if they hike rates this month, we would only see the rate go up to 1%, right? How much more do they need to go right now?
I think it's sort of said that the BOJ will hike, even if hike this month. Probably they can only hike once this year, and it's sort of mostly almost priced in by the market. So that means if you're thinking of the yen's depreciation, if the BOJ hikes in this month's meeting, I don't think that's going to help at the end because it's just priced in, and then probably the selling pressure is going to heat up because the market understands the BOJ can't do any more further. So I think it's not going to be a relief for the yen, and then probably there can be some room for the government intervention to prop up the yen after the BOJ meeting, as we have seen several times before.
They could try, but we're still back at levels of 160. Taro Kimura, really good to have you with us, Bloomberg senior Japan economist here, as we continue to watch the currency markets, of course, also pressuring the yen, perhaps that narrative of U.S. exceptionalism. We continue to see more of a haven pull when it comes to dollar demand. On the other side of that trade, we have seen the pressure on emerging market currencies for the last 4 sessions already. We have seen the rupiah, for example, touch new record lows this weekend, about 8% from its January peak, is the worst performing currency in Asia this year as it fell to multiple record lows and breached a psychological level of 18,000 per dollar last week. The Indian rupee sort of outperformed before because we had this broad support package coming out of the government. We'll continue to watch the developments around that. Surprisingly, a little bit of strength for the Korean won despite these massive losses that we're seeing in the equity space with that tech sell-off. Actually, let's discuss all of this and bring in Bloomberg Emerging Markets and macro strategist Marcus Wong. What are you watching right now to sort of gauge where the emerging market currency trends are going at the moment?
Well, I think the two broad trends that we've seen, firstly, of course, is how the US-Iran war permutates from here. That has always been lingering in the background over the past 3 months. But I think what has really shifted in the past few days, of course, is expectations for the Fed. We saw very robust non-farm payrolls numbers figures. At one point, it was pricing a full quarter point rate hike by the end of this year. Obviously, rate hikes are a negative for Asian currencies in general. So it's, I guess, hardly unsurprising that we've seen some Asian currencies are under pressure as a result. But this is just compounding issues that have been building over the past few months or so. Net oil importers across the board, as you said, rupiah, rupee, over the past few months have seen fallen to record lows alongside the Philippine peso. The Korean war is interesting, right? Even though they are a net oil importer, their current account surplus was initially expected to buffer them due to inflows from, of course, the AI growth, and its impact on the semiconductor sector. But we've seen actually foreign equity outflows as pressuring the Korean won as a result. And the result of that, we saw this morning in the South Korean authorities coming in again to say that they are keenly watching excessive moves in the won.
The yuan strength, highest level in nearly 4 years, and against the basket, no less, has been quite interesting. How do we view this, particularly in light of Beijing's kind of newfound tolerance of that strength?
Yeah, you're right to say. I think the yuan has risen, is one of our outperformers in this region, and I think they face a good problem, if you must. The fundamentals are backing China's story. If you look at exports, you look at trade surplus, it has been very robust. And despite the outperformance we've seen over the past few months or so in the yuan, the yuan is seen as actually quite undervalued versus its basket of currencies, according to a lot of market watchers out there. So of course, if it's left to its own, if left market principles in a sense, I think most people would say that the yuan will actually accelerate at a much stronger pace. But of course, Beijing, the PBOC has been more reticent. He has been more measured in allowing the yuan to appreciate as a result. So as a result of this, a slowing, appreciation of the yuan, this would, in an ideal scenario, actually bore the rest of the Asian currency complex. But in this scenario where Asian currencies, like such as the rupiah, the rupee, Philippine peso, they've been dragged down by, the weightier impact of higher for longer oil prices.
Yeah, I mean, net importers of oil really feeling the pinch. And also, given the fact that we continue to see an outperforming U.S. economy data coming in strong, when it comes to the narrative of U.S. exceptionalism, will that have more ripple effects across Asia? And what will you be watching as the next catalyst for EMFX?
Yeah, so I think there was this interesting report that was over the weekend, and investors talking about it, basically saying, how in most previous scenarios in oil crises, when oil prices surged, the dollar fell as a result. So in a sense, there was a countervailing effect on net oil importers because higher oil prices are weaker dollar. But in this environment, essentially, US has been a net energy exporter for some time over the past few years. The surge in oil has come with a surge in the US dollar. So, and on top of that, the whole AI theme obviously benefits US to the detriment of, a lot of emerging market currencies, emerging market economies. So this double combo is providing, in a sense, a stronger force for the dollar. And this US exceptionalism you will expect to weigh on EM currencies in general as a result.
Bloomberg's emerging markets and macro strategist Marcus Wong there. More ahead on the Asia trade. This is Bloomberg. We are counting down to the open of markets in Hong Kong and mainland China. Let's take a look at what to expect at the China show. Go anchor Yvonne Man joins us now. And Yvonne, the handover, of course, the prelude from the rest of these markets, not such a great setup.
No, and it's going to be pretty ugly given what you guys are seeing in North Asia today, right? When you take a look at what's going on with the Korea markets being smacked right now, the read through what we saw from Friday from some of the ADRs and the Nasdaq Golden Dragon means that Hong Kong could be under some substantial pressure as well here today. Just take a look at what happened with some of these ETFs like KWeb when it came to some of these Chinese tech names in the U.S. as well. Baidu was down some 9%, Alibaba close to 4% decline. So Hong Kong might be feeling a big the hit, and of course the headwinds that we're feeling the fallout from the Kospi. The onshore markets could be a little bit better. Relatively speaking, this is a market that maybe you don't have as much concentration risk as markets like Korea, as markets like Taiwan, right? There is that bit of a buffer here. We talked about the chip stocks onshore have actually been doing quite well, given a lot of anticipation about these upcoming mega chip IPOs, right? We talk about CXMT, Yangtze Memory Tech, and that really has lifted a bit of sentiment here when it comes to the chip makers here domestically. So that could be one thing to watch in particular. If we see a little bit more of that bifurcation, that's one thing to watch. You take a look at what else we're watching out for. Of course, it is Bloomberg Invest. We've got a big lineup of guests coming out this week. And of course, we got a special collaboration today, cross collab with Odd Lots. Tracy Alloway and Joe Weisenthal joining us here. We're on the China show to talk all things Hong Kong, AI. We'll even maybe talk about Toto toilets too, maybe. That might fit into the whole AI discussion as well, guys.
So popular in the U.S. That'll be a common theme. But Yvonne, of course, very much expecting that collaboration on What a Day. Yvonne Man, the China show co-anchor, tag, you're it, because it's going to be a brutal session for the rest of the markets already in early Asia trading. We are seeing the massive losses with the Kospi triggering that circuit breaker. They're coming back, paring back some of those losses, but the Nikkei is also down almost 4% at the moment. And you can see TAIEX futures pointing to downside of more than 6%. This is Bloomberg.